some money, if you've lost some money, maybe there are some market movers that you should be looking into. Let's bring in Muhammed Wagley from Sasfin this morning. Muhammed, good to have you on eNCA. Appreciate the time. We'll get to the oil, we'll get to the gold in just a moment, all those indicators. First of all, market performance yesterday as well. We were all watching Meta so closely. How did we end off on Thursday afternoon?
Thanks for having me, Gareth, and a good morning to yourself and your viewers out there. So I'll start by noting that, broadly speaking, across the week, it's been really soft in terms of performance. And yesterday was no different, with the all-share losing roughly 0.5%, while the top 40 lost 0.45%. Now, this fall is broadly in line with the offshore market, where we're still seeing this higher for longer narrative remain quite pervasive. And what that's doing is serving to put quite a bit of pressure on global risk sentiment. Now, to that extent, we saw the S&P 500, which is obviously the proxy for the American market, give up almost 1.2% yesterday, while the European counterpart, the Euro Stoxx 50, lost 0.6%. So we are seeing this weakness pretty much across the board. Now, what I will note that I think was really quite relevant going into this week, and I think you touched on it as well, was that everybody was really looking ahead to the big tech companies that would be reporting on their Q3 numbers this week, with Microsoft, Google, Meta, and Amazon all reporting this week. Now, we did see quite a bit of softness in those Q3 numbers, particularly with Google and Meta. And in addition to the weakness that we've been seeing in the bond market, this has really reinforced an already jittery market, with risk sentiment being sort of quite weak. Now, I count two of sort of the last 10 days where the JSE has been up. So it's really been quite poor recently, I suppose, since the start of October, and really September and August as well.
The ticking of the techs is down at the moment. It wasn't exactly the results we were looking for. Let's bring up the indicators quickly because, Mohammed, we're going to talk company news in a moment. I just want to bring up, first of all, gold and oil. Then we'll get to the rand very quickly. Here it is for everybody this morning. We're all watching closely the gold, staying just south, Mohammed, at nearly 0.25% to the good, but 1,989 for gold is what I have. And luckily, at least for December, we're seeing that Brent crude price staying south of 90. I have 88.46. Wrap those up for me. Gold and oil. What are you reading into that?
So I suppose intuitively speaking, we're seeing a bit of dollar strength now, just coming back to that weakness in risk sentiment that I mentioned earlier. This is more a sort of case of flight to safe haven in relation to the dollar as well as gold. But just speaking to sort of the oil price, I think that one's quite interesting. Now, just to put those numbers into context, despite sort of broadly falling since September's highs, since the onset of the Israel-Hamas war earlier this month, there's been a near 5% rise in the oil price. But as you correctly point out, we did see a nice fall yesterday of about 2.5%, which translated to about $2 to leave us at sort of the levels which you mentioned. And that's really on the back of fears of sort of a wider escalating, wider reaching conflict in the Middle East somewhat easing. Now, really why this has happened is Israel has sort of agreed to delay the anticipated ground invasion of Gaza. They are still currently doing raids, but that doesn't really constitute an invasion. That's sort of more preparation for the oncoming invasion. So I suppose then, in terms of how this will affect us, on a day-to-day in terms of the fuel price, what's actually more relevant there is the monthly average data in terms of the oil price. And that's actually been ticking down, and that does actually bode well for a cut in the price early next month. So the latest data coming out of the Central Energy Fund actually points to an over-recovery in both petrol and diesel. So the rough estimate is that, fingers crossed, petrol prices should be coming down by about R2 a litre, while diesel should come down by about R1 a litre early next month. So
won't that be a wonderful Christmas present as well? Because we know, Mohammed, of course, about the early November numbers, first Wednesday of the month, those numbers for fuel coming down already. But what we're looking ahead to now, of course, is December, ahead of those holidays. Hopefully that fuel price, as you predict, if it's heading south, is good news for us. Let's just very quickly wrap through the currencies. I'm not going to take your time on this, Mohammed. Let me just bring it up very quickly. Dollar, 18.92. We're staying away from that 19 rand to the US dollar. 18.96 at the close yesterday, so strengthening of 4 cents. The euro, 19.99. Oh, it's so close to that 20. We're not there, though. Also dipping under 23 is the pound against the rand, 22.97. The reason I want to move past that is not clicking, Mohammed, at clicks. What's happening there? Resilient performance in their annual results, but not exactly shooting the lights out.
Yeah, interesting. So the market actually reacted quite positively to it. The share actually gained 6% yesterday and was actually one of the few really good performers on the JSE. So just with reference to the numbers, they grew turnover by 8.2%, but really what underpinned performance was strong growth in sort of their retail sector. Now, their operating profit grew by 9% to sit at 3.6 billion rand, and their operating margin increased to 8.7%. And again, it was pointed to the retail business has provided a much needed boost, and that was sort of the superstar segment within those results. Now, I think what the market also liked was sort of the reinforcement of sort of long-term plans coming good, and to that extent, the company noted that they plan to open between 40 and 50 new stores and pharmacies in 2024, and that formed part of their long-term target of opening 1,200 new locations. So they're on target there, and I think the market really quite liked it. So I got a bit of a bounce there from the retail sector, and quite happy to see that.
And let's talk property for a second as well, because with all the increased cost of living, you wouldn't think that a property company, Muhammad, is going to be doing all that well. But Baldwin Properties saying interest rates affecting their consumer demand. And despite all that, you drive around the country, Baldwin are building.
Absolutely. Yeah. So look, I think the weakness that we see, and Baldwin pointed to this, you mentioned it as well, it's not really specific to Baldwin. There are a whole bunch of macroeconomic factors. Really, the big one intuitively is the interest rate. The higher the interest rate is, the more prohibitive financing and things like that become. But what they also pointed to, which I thought was quite interesting, is that, they really paint a picture of practicality. This is a market where we're seeing sort of families sort of move to smaller homes just to save as much income, as much money as they can, really, because these interest rates are proving to be quite prohibitive. Where we did see a bit of growth is there's still a lot of demand for property in the Western Cape, and that has to do with, again, external factors, things like immigration sort of driving up the demand here. But we're seeing softness pretty much across the board elsewhere. So, the issues that Baldwin is having is not really unique to them, but is really sort of more a symptom of a weak industry that we're seeing. So as long as these interest rates remain high, and it looks like it will going into at least halfway through 2024, we'll probably see a bit of pressure on that industry. But when the interest rates start to come down, I assume we'll start to see a little bit of an uptick in the demand there, and that should bode well for companies like Baldwin.
Yeah, it certainly should. I just had a moment where you said mid-2024. I can't believe we're nearly there, Muhammad. Thank you very much for joining us this morning. Wonderful analysis from Muhammed Wagley, portfolio manager at Sasfin, just making